Hi, everyone. Happy Monday. And I look forward to the entire week with hosting moderating our VCTV, which is the Venture Capital TV from LATOKEN, where we connect investors like yourself, speakers like yourself, with the startups that we have on the community. So today's topic is also very unique in the sense I'm moderating it for the first time. It's about VC insights, VC investments into Industry 4.0, IoT, and smart cities. By the way, myself, Sunny Mohanty, I'm the Regional Director of LATOKEN, and I'm based here in Singapore. And I welcome all our speakers today from various parts of the world, India, Turkey, and Italy. So we have some new speakers here on the panel today. So I would like to start with our new speakers who just attended a session for the first time. So we have three new speakers, Marjay, who is dialing in now from Turkey, Ashwin, who is dialing in from Mumbai, and Sailesh, who is dialing in from Hyderabad. Hi, hello, welcome everyone. How is everybody doing today?
Hi, Sunny. We're good. Thank you for having us. Real pleasure.
Yes, Sunny.
Very good.
And last but not least, I can't forget Fabio, who's been a regular speaker on my panels. I always love to hear from him. Welcome back again. So, as I said, let's start with a short introduction about yourself. Since I'm in Asia, in Singapore, I like to start with India. Ashwin, please start with a short bio about yourself and what you do.
So I own a few companies. Apart from doing investments, I sit on the advisory board of two venture capital funds as well. So one of them is called Ideal Ventures. It's UAE based, and the other is called Crucible Venture Advisors. It's India based. It's a new domestic VC fund. Apart from that, I own a few companies. One is called Sapio Analytics, which is in the space of advising governments, and through that also we do investments in the space of B2G kind of investments also. I also own a company called Great Managers Recruit. It's a pretty well known people manager consultancy firm, and over there we do a few corporate investments in HR tech space also. And then I also own a company called Cancer Rounds, which is basically one of the world's first virtual cancer care hospitals. And apart from that, I advise the government of India. I'm part of the advisory board of ICMR, and also a regional mentor of change at Niti Aayog. That's a small thing, but that's also something which I do.
Wow, Ashwin, you wearing so many multiple hats. I wonder, how do you find time during this time? Welcome. Anyways, we're going to hear more from you. Thank you, Ashwin, for that intro. Shailesh, over to you, please.
Sure. Thanks, Sunny. I'm a general partner in a Singapore-based fund called Antel Ventures, which is a $100 million fund focused on media, entertainment, health, medtech, consumer brands, and urban tech. We invest in early growth stage startups across the globe, looking to scale in India and Southeast Asia. Our thesis has always been founder first. As we invest in a little bit of early growth stage, which is typically pre-Series A, we typically vet the founders, and that's the first key for us to fall in love with the team and the validation of the team to execute the idea. So that's what we focus on, and we have 37 investments as part of our portfolio, 50% of them in India, around 30% in the US, and the rest are scattered around Southeast Asia, Europe, as well as in Israel.
Excellent. Sailesh, you just mentioned that your co-founder or partner is also based in Singapore. Great to know that. Welcome to VCTV. So the next speaker I'd like to go is, okay, so it's basically, he just taught us how to pronounce his name. It's called Marjay, and he's going to obviously tell the viewers how to pronounce his name. Marjay, over to you.
Thank you, Sonia. Welcome, everybody. Exactly, and the trick to make it is to think of magic, is how I like to frame it. When you think magic, it's just a little twist, and there you go with Machi, and that's my name. Thank you for having me here. It's a pleasure to join this wonderful panel. Like Sonia mentioned, I'm diving in from Turkey, but it's just a short trip, whereas originally I'm from Poland, Warsaw, and I'm covering Central Eastern European region. For the last 10 years, I've been working at a few venture capital funds as investment manager, investment professional. And most recently, I've been engaged with Innogy Innovation Hub, which is a CVC of German utility company Innogy SE, which is a big producer and distributor of energy. Innogy Innovation Hub, however, is an investor, a VC investor with headquarters in Berlin, offices in Palo Alto, Tel Aviv, London, and Warsaw. And it's been investing into seed and early growth startups with portfolio of over 65 startups with valuation over 160 million euros. Tickets are usually from 500,000 up to several or even 10 million euros, as seed and early growth stage suggests. And there are 4 verticals that Innogy has been active within. And those are obviously smart cities and protect technologies, as buildings are a big consumer of energy. And I'd be happy to discuss the thesis further in our discussion. And other investment areas are within energy tech. Next is blockchain, but with machine-to-machine interaction and settlement of transactions between the machines as a priority. And 4th one being cybersecurity, in order to make the digital future secure, that Innogy is investing into. I'm also involved in supporting portfolio startups with growth as a growth manager. That's I work closely with various corporates and industry partners to help with POCs and introductions, as this is something that you all folks know is crucial in growing startup into big and regular international business. Happy to discuss in details next, and thank you again for having me.
Excellent, excellent, Majay. I like your preparation. You're well prepared. Thank you so much. I have to say that.
Mm-hmm.
Thank you, Majay. Last but not least, our regular speaker who, has a lot to share, Fabio. Welcome back. Please introduce yourself again for those who maybe haven't seen your session. Please, over to you.
Thanks, Sonny. I'm an economist, a PhD in economics from the University of Chicago. I've been an economist with the International Monetary Fund for many years. Then I moved to the European Central Bank for the launch of the euro. And then I made the jump into the private sector in Goldman Sachs, London. Then I moved to Qatar in the heydays of the oil boom. I moved to Dubai. I've been the chief strategy officer of the Oman Investment Fund, and now I became a partner in an investment bank based in New York, with offices in Dubai and Hong Kong. And we essentially help companies to raise capital for growth, or to list on the over-the-counter market in the US. We also manage a fund which takes positions in innovative companies, mostly listed in the US, but also in so.
All right. Okay. So, thank you. So, economist, banker, investment banker, so many portfolios, Fabio. Welcome back. We always love to
I also advise the Libyan Investment Authority at present because they are, there's a civil war going on in this beleaguered country, but they have a sovereign wealth fund which needs to be brought up to standards, international standards, compliance with Santiago Principle, and that's what I've been doing for the past 4 years, by the way.
Wow. Great, good to know that, because we never disclosed this in other panels. Okay, good to know that. Thank you for that. So great. Now we are set for the Monday. We're all set for the first day of the week. Now I would like to ask some questions around investments, which obviously I just mentioned briefly before we went live. I'd like to start with Ashwin first. Hi, Ashwin. So please tell our viewers what's the current trends in the space, IoT. Industry 4.0 is a big term, I mean, that encapsulates so many technologies and everything. It's a big thing, is a big buzzword, obviously pre-COVID as well, but COVID has done a lot of things to that also. So we'd like to know current trends, challenges, your recent investments into smart cities or the technology that you've done. And yeah, please go over that.
Okay. So I think, I mean, as you mentioned rightly, pre-COVID also there has been a big boom, I would say, in terms of Industry 4.0, and that has continued. I think that has increased a lot in the last few months. Just to give you the context, I'll kind of, since you mentioned the kind of trend. So in India, the Department of Science and Technology has formed a new body, which I'm also advisory to that body, which is basically focused towards creating hubs for, I think, 27 new age technologies. They call it the new age technologies, right? And this new age basically is all of them are Industry 4.0. They're all connected to IoT and AI, and they've got different domains. Yeah. And they're forming 27 different, 30 different hubs across different parts of the country. And there's a significant amount of money which is being given to each of these hubs. The total amount in INR would be, I think, around 3,000 crores have been allotted towards the formation of these 30 hubs. And it's being done through the DST. And this is just to tell you, this was kind of planned even before the whole COVID situation happened. But the point being that this becomes the core focus of the government of India, which means clearly it is something which is going to be big in different ways. Yeah. And so this is just to give the context. And then based on that, now there are a lot of investments which are now starting to happen even in the space of, I would say, not really IoT per se, but in terms of smart cities. What we are seeing right now, what will be happening is there's a concept called smart hospital, which is now getting created a lot. The PM of the country of India recently announced something called a health card. And after that, there has been a series of companies coming in that space as well, talking about how healthcare can be made smart. And so basically the point being that the whole new age tech has always been in focus in the last 2 years or so. It has increased significantly in the last few months. And since I've been part of a number of policy decisions of the government as well, so I can say that there has been a significant push from the government as well to invest in companies which are in the space of Industry 4.0. So in terms of my investments in the last few months, there has been one in a company which is in the space of, I mean, you can call it ed tech, because again, that's a new, new term which everyone likes. It's become a very big term in the world now. I mean, in terms of the investments happening now. So it's not really ed tech per se. It basically focuses towards providing skill development to corporates, to different segments, and also can be used towards providing, e-learning to schools and colleges as well. So they have got a video platform, something like a Zoom, but with much more facilities focused towards e-learning. So that has been one of my major investments. Now, when we invested in this, we realized one thing. This company was not really focusing on that one thing, but now we decided to bring in was that there is a major skill development plan being planned by the government of India across the country, where basically skills will be provided to different strata of society, different types of people. And this will obviously all be done remotely. So the point being that, if that happens, then there's a huge scope of any platform which provides either skill learning or any form of learning through tech. So that was the reason why we decided to kind of go ahead with this particular company.
So that's a very good point. How does the future of work looks like, in your opinion? Like, because people, like a lot of governments across the world are pumping in money in reskilling or upskilling their citizens. So why do you think it's happening? What's the future of work is going to look like?
So one thing what is happening in India, outside India as well, is that there is this realization that a new world is being formed. So whenever there is a rejig of things, something new gets created, then there's an opportunity to create something new. So at least from Indian perspective, what has happened is that the government now thinks that, okay, this is an opportunity to do something much more, which was not possible earlier, because the entire spectrum, the way people think, has changed. So that is the reason. I mean, the future of work, as we all know, I mean, that's a known fact, will be digital, will be through the way Zoom is there right now. This is how it is. I mean, we all know Google in Singapore also, I believe the biggest companies, Google and all, are working from home till the mid of the next year, I believe, right? So this is how it is happening. So that is definitely the future of work to a great extent. Along with that, since there's a new world getting created, there's a need of new skills while this new world gets created. So that's where the whole skill development becomes very critical also.
Absolutely, agree to that. Thank you very much, Ashwin, for sharing those insights and opening up the session. Thank you. Next, I would like to go to Salesh. Hi, Salesh. Please share your insights about the trends, challenges, investments, Industry 4.0. Yeah,
absolutely, right? Like Industry 4.0 for us comes under urban tech, and we've seen a huge shift globally, especially given that our focus being in Southeast Asia, India, Israel, and the US. We feel that rising internet population, penetration, and digitization have also helped industries focus on efficiency and cost-efficient productivity. And with that, we see a lot of uptrends in this space. And what has happened with the entire industrial 4.0, be it with IoT, be it smart cities, or the technology they're using, is the cost of the customer acquisition or utilizing has come down fairly low. So adoption of that has become significantly high to improve efficiency, lower cost benefits, increase output, and also customize offering. And not only that, also improve on generating new revenue and business models. So we've seen a huge surge of companies in this space. And as I just mentioned to you earlier, we've worked with some amazing companies from Singapore looking to scale up in India, just as recent as last month. And some of them are at a pre-Series A, some are at Series C. And we've seen the kind of depth of data they've been focusing on. We realized that data capture, data optimization, and how do you showcase data is most important to train your systems and help them become digitally efficient. For us, it's a growing sector that we intend to focus on, invest in the next upcoming years, and try and also explore synergies between these different entities we invest in globally to kind of formulate best practices and arrive at even more better operating models. Coming to the companies we invested in recently, one is an Indian company in the IoT space, which is focusing on consumers. It's called a company called Smidge, and what they do is they develop consumer products, and the goal is to have machines speak with each other. So creating a smart platform with IoT sensors and the entire data capture of proprietary information to constantly improve the devices, help them, the entire concept of what an Uber did, or what actually a Tesla does, where you don't work on hardware and improve the dependency on it. Rather, you benefit from hardware in the cloud and improve it on the go. The other company we invested recently is called Xeron Microsystems, which is soft POS and a micro neobank, which are again a lot of buzzwords, but it's a very interesting company which has onboarded over 30,000 vendors in the last 6 months during the COVID itself. Because as you can see, a lot of vendors, once the markets open, want to go towards a no-touch policy, whereas want to ensure that the new normal is achieved and improve business. So we're trying to create sustainable environments using these companies, and we finally ask all our companies, what are they doing to help create a sustainable environment to different stakeholders, be it citizens, consumers, governments, as well as businesses.
Yeah, I think Salesh, you went a little bit faint with your voice, but if I heard you correctly, you said that you've invested into a micro neobank in the last few months.
It's a company called Xeron Microsystems. It's a soft POS and a micro neobank.
Right.
And it's onboarded around 30,000 vendors in the last 6 months, which is quite a feat given the current circumstances.
Is it different from a neobank in general? Because today I was scrolling through my LinkedIn, I saw this ad, like this lady sitting on the beanbag open a bank account from your bean bag. How different that is.
Absolutely. So this is more for an individual level too, and also for the small and medium-sized stores. So it really helps you connect and manage your finances even more efficiently and improve operational excellence.
Okay, great, Salish. Thank you so much for sharing those. Next, we have Marjay. Hi, Marjay. You there?
Hi, yes, I'm there.
Okay, please share your insights into others' their trends, challenges, and your recent investments in the last 3 to 6 months.
Yes, happy to do so. I'm interested to hear what Fabio will have to say about Europe venture and investment space, as from my perspective, it has slowed down quite significantly after COVID. And although there are quite a few funds which are doing deals remotely, this is still not very popular. And a lot of investors and corporates are rather risk averse and want to stay a little bit protective and see how the situation develops, also within Industry 4.0 and smart city space. However, there are a lot of new interesting technologies that pop out, and a lot of them utilize sensor around smart buildings to support with information about health environment and how it can affect people. One of the very interesting startups that I've been working with recently as a mentor in a global acceleration program out of Singapore, by the way, is doing exactly this, measuring IoT with the usage of IoT device, measuring all different environmental measures within a building, mixing it and supporting with personal health data collected by wearable devices, and with meteo data and general information about weather and air condition in the area. Based on that, they are driving insights to support information about health issues and health problems of individuals. As for other trends within the Industry 4.0, I can see a lot of projects going into online sales, and projects that were connecting hardware and software space, like, for example, machines for intralogistics into warehouse and magazines, which had not been deployed without an offline visit, now are going online as well. And this is a very strong trend which helps startups to expand into much wider space globally, as those connections can be made without concern of country proximity, and helps them to go into the best market from their point of view into further growth. And I can see that this really accelerates digitization of the industries like real estate, factories, magazines, logistics, which were, well, a bit laggers in terms of acceptance of new technologies when we compare it to, say, mobile banking, TMT, or any other sectors. And I believe this, at the end, might have a positive impact in terms of technology adoption.
Okay, Marjay, I just want to ask, I mean, Fabio obviously is going to share his insights about investments from his perspective, but I just want to know, why do you think the investments have gone down? When you say investments have gone down in Europe, is it like recent times, or when we just had the pandemic in early February and March? Just want to know your thoughts. I mean, was it like when you say the investments have gone down, was it specifically during a particular time or all time down till now?
I have seen investors backing down from their commitments into investment and into funds, and this is because of the risk aversion, which increased during uncertain times like pandemics. Is it good or bad? It's for, well, your own decision and discretion. I've heard sayings like that this is too good of a crisis to waste it, and it is exactly the best time to increase your involvement and investments. However, there are well, different opinions, and be it corporates or institutional investors or high net worth individuals, in these uncertain times, they decided to, well, wait and see how situation develops, what happens, and what sectors will be the winners after the COVID recession breakdown. And as for corporates, the other reason being their the importance of the core business for a corporate investor, meaning when you have your core business under danger because of the pandemics and the wide ripples into economy that it brought, you better focus on protecting your core business rather than investing or taking more money out of your purse into risky enterprises. That's the view that some of the corporates took. That's my opinion and how I look at it.
That's great. I mean, burning less cash is, yeah, I get it. Sorry, just last one. You mentioned about the startup that are into IoT sensors in Singapore that you've invested into, and you mentioned it's about office buildings that, as well as, did you just say metro? They've said these IoT sensors are also placed in the metro to monitor health and weather. Did you just say that?
Not this particular startup which I was mentioning, but I've seen another projects that were using thermovision and thermal cameras in public spaces to monitor, well, temperature of people, and based on that to see whether there might be people infected by COVID or any other disease which increase their body temperature.
Right, got it. Thank you, Majay, for your opinion and insights. Thank you, Fabio. Please share your insights besides answering what Majay had to say.
No, I do confirm his observation, his anecdotal evidence that the VC space in Europe has slowed down. The reason is twofold, I would say. One, Europe has never been a hotbed of venture capital because the risk culture is different from the US. So if you exclude a couple of hotspots, UK, in part Berlin, the VC community is not as thriving as elsewhere. And it's not even in the, let's say, order of magnitude of Silicon Valley. The reason why the VC space has suffered as a consequence of the pandemics is, in my view, quite clear. The valuation have changed. So if before January, a business plan would project a certain growth pattern, now that growth pattern has to be reviewed, reassessed, maybe reformulated. And this means that the valuation that had been attached to a particular startup in January must be revised. Plus, for many startups, it's not wise now to sell stakes because the valuation inevitably will be affected by the heightened risk. So unless somebody needs money desperately and is willing to sell, let's say, at a discount, but I shouldn't call discount, I should call it at a higher risk valuation. People will wait until 2021 at least to make the new move. By the way, the 2020 financial results will be a litmus test for many companies, because if companies have gone through these pandemics brilliantly, that's a resilience test which is unique. Therefore, if you go through, if a particular company goes through 2020 without suffering many consequences, its valuation obviously will be increased. So that's why the whole VC space in Europe in a sort of suspended coma. I'm maybe exaggerating, but the reason why most operations have been frozen is because the valuation have changed and must be reassessed. Now, for what I do, speaking about my role in this space, we are a link between the European and in general international companies and the US capital market, where the culture of risk is more entrenched and where you can get valuations which are reflective of that risk attitude. So for people who want to raise, for European companies, Asian companies, Middle Eastern companies that want to raise capital in these testing times, the best option is the US market, in particular the OTC market, which has lower regulatory requirements, so it's very company friendly. Yeah. And where you can definitely make a pitch to an audience, to a set of investors, right, with a culture of risk that is much more developed and much more sophisticated than right, everyone else.
Okay. So I think Fabio, you've touched upon very good valid points. Valuation and how risk averse you are, like your appetite for taking risk. I mean, it varies between European, landscape and Silicon Valley, as you rightly mentioned. I mean, these factors will definitely drive the sentiments of the investors. Very rightly put. And as you rightly said, if I understood correctly, those startups who are going to survive or thrive during this crisis, the valuations obviously are going to be better, healthier in the coming years.
For those, it's better not to raise now. It's better to postpone the capital raising activity to when you can have audited accounts or audited financials which prove your resilience.
Great. Thank you very much. Thank you very much, Fabio, for sharing those insights. It's very helpful for other viewers of us, our startup community as well. Thank you so much. So that brings us to the next question that I have. I like to start with the Asia market to understand what's happening in Asia, because that's a huge market with a lot of complexities, a lot of different countries, a lot of cultural nuances as well. So I'd like to start with Ashwin. Ashwin, what has changed? Okay, Fabio shared about the differences between Europe and USA in terms of risk appetite and everything. So Ashwin, what has changed in terms of VC investments in India and Southeast Asia and the markets that you are in charge of in Asia? So what do you see has changed in these last 3 to 6 months as compared to the previous years?
I think what Fabio mentioned is kind of valid for Asian market as well. I think it's a global thing. This is happening globally. The companies who are in a position to sustain themselves right now are not really looking to raise at a value which can be lower value for them. So that is happening for sure. And there is this mindset that you need to now basically let this entire period go for the next few months, and then probably things will become better, and that's when further a better raise can happen. A better fundraise can happen. That is the mindset amongst many of the startups which I am interacting with as well, and this is true for India. This is true for even I work with UAE market also. I've seen that happening there as well. So yeah, so this is exactly I think very similar in our case as well. Also, apart from that, what all has changed, I would say, I mean, the way it works, that there are certain, which is not a very good thing, but it works that whenever some major event happens, then there are certain segments, certain sectors which suddenly become quite hot. And then there are many investments in that sector. And then many investments fail also because, there are too many investments happening in that sector. And this is again, I've seen this happening for so long. Happens again here right now. I'm seeing lots of smaller VC funds and all investing in, let's say, the ed tech space because they're thinking that, okay, this is going to be big now. These are all temporary things, according to me. I mean, at the end of the day, this is not how one should think. I mean, at the end of the day, the vision should be much bigger. But yeah, this is also happening. There are certain segments which have suddenly become more prominent. So many VCs are now looking at only those segments for the time being, those sectors for the time being. I would recommend the VCs to look for maybe, I mean, that's how it should be. What is going to happen 2 years from now, 3 years from now, and not really focused upon what is happening at this moment because of the change which is happening right now. So I would recommend that, but still I can see many investments that are happening because of the change which we are seeing at this moment, which is, according to me, and many of these changes are temporary. Many of these are permanent as well, but still this is one of the things which I have noticed happening in the Asian market. In terms of overall, the mindset and all, see, there is a clear economic recession which has come in. I mean, I'm talking about, let's say, India right now, and it's a big one. It's a grand recession which has come in, and no one can deny that fact. And this recession, what happens when in such a recession scenario is that, I mean, the corporate investments, which I think the other message. I am so sorry, I cannot pronounce his name properly. Also,
Majay.
That corporate investments, because I have been working, I also do corporate investments, right, from my own companies. Now the focus is that to focus on what is at hand right now rather than what is something which is somewhat non-core. So that has also decreased a lot because the recession is a reality. And I think in the next few quarters, two more quarters, we will see this the problem even deepening rather than getting solved in the next 2 quarters for sure. And then probably things will get back to a little better situation for the corporates and investments coming through corporates. That's what my overall reading of the scenario is.
Ashwin, you really liked the way you put it, like, VCs should be thinking from a longer term perspective, 2 years down the lane. For instance, a travel tech startup, right, probably is not a good, I mean, the flip side, like, they are probably very badly hit by the pandemic, but the valuations are very obviously gone down drastically, but that's the right time to invest. I mean, travel is always going to be back, always. We know that, right? For sure, travel is always going to be back. I mean, once this virus becomes mainstream, in a sense, like other viruses we have, flu viruses and everything else, people are going to start traveling like crazy. That's what I think.
So there's a big opportunity that way. Yeah, exactly.
Yeah, great. Thank you, Ashwin, for those insights. I'd like to go next with Salish. Over to you with the same questions, please. Share your insights.
Absolutely, Sunny. So I think what the pandemic has taught us is mostly to be more resilient and to focus, introspect. And as Ashwin rightly said, all of us kind of look 4 years from now. What's relevant 4 years from now? And that's the reason most of the VCs who understand what they're doing continue to invest in a time like this. Right. It's true that corporate VCs have refrained from investment, as Majia said. It's true that they're trying to focus on what's currently important to them, which is sustainability. At the same time, I've seen a lot of real estate companies in India look towards technology to improve their sales, reach out to customers. And also what's interesting is, as a lot of trends which are happening, certain industries which get more traction than the other because of the pandemic. But what we're looking at is what is more sustainable. Because post the pandemic, if we don't look at the world to be a more sustainable environment, God knows how we'll be hit later. So I think the access to technology, mobility, and communication has helped people focus on more digital businesses and try and improve on that. For instance, as Fabio mentioned and also Marcia mentioned, we have invested actually in a company in Singapore which does the eye thermal sensor, which is placed currently in the Singapore Changi Airport in over 50 businesses within Singapore itself, which help them create a safer workplace, as I like to call it. And we've seen that trend in India as well, where everyone, though Indian workplace isn't opened up completely, they're looking at what do we need to make this more resilient, make it more equipped for the new normal. So people are focusing on that. And I think we all have to realize that from the greatest of depressions, some of the largest companies in the world have been born. Some of the largest ideas have evolved. So I think what we're referring to is do not invest in Me Too's and the guys. And that's why I always come down to the entrepreneur, the founder. As long as the right mix, there's a hacker, there's a hustler and a visionary, and these guys can execute an idea to the T. I think that's what we constantly look at for the sustainability and the scaling of the company. And I think that's what we constantly back. But I do agree that the economic recession is going to create more challenges than what people have to offer. But yeah, I think that's one problem at a time.
Exactly. I mean, as you rightly touched based on all the valid points, always there's an opportunity in crisis. I just want to know more about those thermo sensors that are placed in Changi Airport, because obviously I live here. So I just want to know, when did you roll this out? How efficient it was when you roll this out?
Interesting thing, Sunny, because the company invested in was a wound care management company focused towards health tech and med tech. And given the current pandemic in March, the founder was, started introspecting of how he can stay relevant, because most of the hospitals couldn't really focus on using this or giving a POC, be it in Singapore, Southeast Asia, or India. So he used this sensor which he was using in the device to create this eye thermo sensor and use it for sensing people and measuring vitals as well. The efficiency has been quite great. I think he's generated over $15 million in revenue in the last 3 months.
Wow. Can I know the name of this company and the founder?
It's called Chronicare, absolutely. Chronicare. So the name Chronicare was chronic wounds, and that's how it started off. But of course, he's generating more revenue through the eye thermo sensor. So that's something we also look at founders, because given whatever the time, whatever the challenge, is the resilience of the founder who continues to help him evolve and stay focused on what he wants to create, which is solving a specific problem.
Right. It's a very brilliant use case of a resilience story coming from a founder who managed to pivot in the right time, in the right direction, and has got amazed Mr. Saki as well, right?
Yes, absolutely.
Great. So we just have 15 more minutes. I just want our speakers to have questions within themselves as well, because I'm sure some burning questions from the Asian people who are in Asia to speakers who are in the Europe. What's happening in the space? Exchange of knowledge. Please, this is the time. Let's start asking questions to each other.
Maybe if I can comment on what's been said just recently. From our perspective, we also advise startups to be prepared for not having new investment rounds in the coming 12, 18, or 24 months. And as Fabio mentioned, because of the valuation and the risk aversion, this is not the best timing for fundraising. That's why startups and our portfolio companies need to be prepared to lower cash burn and really be prepared for increased liquidity issues in a longer period. However, as Sailesh mentioned, it's all comes down to the founders and the team, as resilience is just the first point. And what's most important here is how Nassim Taleb framed it in his book, Anti-Fragility. So to be anti-fragile, meaning not only be prepared to stay through the crisis, but to make most of it. And like we've spoken before, it's too good of a crisis to be wasted, to waste such an opportunity. And the most brilliant entrepreneurs who can pivot in the right direction and find a way to find new business opportunity and be anti-fragile, not only resilient, will thrive. And one example being mentioned of using thermovision cameras instead of for industry usage to tracking people's temperature and person's temperature in public spaces like airports or subway station. Another is changing the sales activity and go-to-market strategy to totally online. One of our companies in the PropTech space, in the context exactly, who was doing automated tracking of progress and the construction site in order to start a pilot with a client, big real estate company in CE region, operating in CE region, shipped a laptop with pre-installed software from their London office to Warsaw. And without traveling, without people from the team, which is originally out of Israel, going to Warsaw, how it would have looked normally, they were able to coordinate everything and to email them the passwords and make their training online and ship the laptop with pre-installed software in order for the client to be able to use it. And it shows how startups and great teams can adopt the new situation, and that's that where the winners will be.
Great insights. Mazay, I totally have to agree with that. Resiliency and anti-fragility. Anybody else? Any questions?
I have a question for Majay, if I may. Majay, like, you know, the two countries where we focus in Singapore and Israel have really never shut down, right? I mean, they've always stayed on top of things. They've practiced, fortunately, given the population, and their practices have stayed on board. And I'm sure Sunny can attest to that. Love to know from the Europe aspect, how are the startups prepping for this? And have they basically gone into hibernation to go through this phase? Or have you seen some really interesting success stories within your portfolio or within your network of these startups, and which industry have they really thrived in?
Yes, so well, startups here in Europe are preparing for the shutdown, and well, a lot of countries have already been shut down with restriction in traveling and with no possibility to really do business the way it used to be. So startups are well going online wherever it is possible, and also preparing in limiting their cash flow expenditure, meaning with unfortunately layoffs very often, limiting team size, and being prepared to increase sales cycle because of corporates' decision to postpone the implementation projects. And few of the industry partners within smart building space that we've been working with already said that startups from our portfolio, which we showed them, were very interesting within top 3 R&D priority for this year, but because of their problems with the core business and real estate and the prices, downward pressure on the real estate prices and office buildings, especially with more and more tenants moving out and going for remote work. So the developers just stopped the implementation process, and startups had to be prepared for longer sales cycles.
Got it. Thank you, Majay.
I think Salesh is very much industry specific. If you ask me, like travel tech, prop tech, obviously nobody is using buildings. I mean, nobody is going to, and countries like Singapore, I think it's the same situation when it comes to real estate as well. People are working from home. I mean, corporations have told people can work from home probably until mid to 2021. Obviously, you know, those other sectors are going to be affected. And I think it applies to any big cities like Tel Aviv, Singapore, and other countries in the world. Yeah, I just wanted to add to that. Thank you. Any other questions any burning questions for? Yes,
so I would like to ask something. So basically, this is regarding expansion to UK and the rest of the Europe. So there's this company of mine, which they made a killing in the last 6 months. They were able to expand by more than 1,000%, you know, in terms of the revenue and employee size and everything also. And then they took the decision of expanding to UK as well. So one of the co-founders is actually in UK right now, London right now, trying to expand over there. So it's basically in the space of, I mean, it has got few products in the AI space. One of them is, let's say, AI-driven art restoration. That is one of the things which is there. Quite a few products in the AI space. So my question is, in terms of expansion, is it the right time? And I mean, what needs to be thought of, taken care of while expanding to Europe right now, considering the situation is such? So yeah, that's my question, both to Mathieu and to Fabio.
Anyone who would like to take this question? It's a very great question, actually.
Well, so from my perspective, it's a very difficult time to expand into Europe, especially if you're a B2B business and especially if you aim for enterprise or corporate clients, because, well, like mentioned just before, I see many corporations really struggling with their core business and putting, well, first of all, marketing expenditures, and second of all, R&D expenditures, which are like you mentioned yourself, non-core for the business, as a second or last priority. And this makes startups that need to find their clients to struggle with it. However, of course, not all companies are doing that. And if you can find a good partner or maybe good investor or good corporation that can help you with your first POCs, that's a timing where you'll be having less competition than usual. So it's again a measure of risk and reward. If you are willing to take the risk, if you think you can make it, that's a good time. But it's also more difficult than usual.
Fabio, do you have any insights to this question, like expansion to Europe from Asia?
Expansion of manufacturing companies or traditional services companies clearly requires that you have a business proposition that is, how can I say, unusual or that is original. So if you feel a market need, or if you propose a solution to a problem, I would say that it's not a bad time to try a penetration in the European market. Because it's true that times are challenging, but it's also true that it's cheaper to do it now for a number of reasons, especially in terms of talent that you can hire. And as I said, there might be areas created by the pandemics, but not necessarily, which can be taken advantage of. So in Europe is big, so you have a quite variegated picture. I don't know, Italy and Spain have suffered more, but Germany will come out with flying colors from these pandemics. So, I always joke that if you want to do a long-short strategy, you should sell the UK and sell short the UK and buy Germany, because yeah, well, I hope that people from the UK won't wait for me in a dark alley with a long knife. But in general, the reaction to the pandemics has been a lot different across European countries. So Germany remains a place where the situation will recover. The economic system has been quite resilient, and the bounce back will be quite phenomenal. And when I talk about Germany, I talk about the German sphere, which includes Holland, Belgium, Switzerland, Northern Italy, Poland, Czech Republic, Denmark. Okay, so it's the core Europe, or core Euroland, if you wish. So my advice is be wise, but look at opportunities, because you might be surprised. And obviously, if you want to, we can talk directly and examine these possibilities. My view, it's not a bad instance right now to make a move.
Thank you, Fabio, for that. Thank you, Matt.
Thank you both of you. I mean, I understand both where Fabio and Marjay are coming from their perspectives. I think obviously each one of them has got their own points for why. To your question, Ashwin, and there are two perspectives as well. I mean, again depends on you what and your team.
I may add, in Europe. Obviously not over the next few weeks, and maybe not even the next few months, but there is a plan, a mega plan, to spend 750 billion euro in digitalization, Green New Deal, infrastructure, etc., etc. So if you follow what's going on at national level, because these 750 billion must be spent by national governments on the basis of projects which will need the approval of the European Commission and the European institutions in general, EU institutions.
Yeah.
So if you follow what's going on and where each national government is directing these resources, you will be able to find opportunities that come once in a lifetime.
Great.
Thanks a lot, Fabio, for that.
I mean, Fabio gave you a big piece of advice on our VCTV. So that brings to my next question, because the reason I asked this question, like people like Fabio, who are economists, who are investment bankers, they bring a lot of wealth of immense experience and knowledge to this platform. And so hence my question to our speakers first who just joined us for the first time. Salesh, what do you think about our sessions, VCTV? What's your feedback about this and how has that benefited you?
No, I think it's a great knowledge sharing session, as well as also trying to understand what's happening out there. Helps you also question your ethos, thesis, and whether you have your facts correct. It's always great to speak with like minds and also people who are focused in the same industry. And I did do one session earlier a while back, which was around IoT and other thing too. But I think it was also involved startup pitching as well. So I think this is a great platform because I think this is the new normal. And as you mentioned about travel, we have invested in a few travel tech companies, and what IATA tells us is that by 2024, the airports are going to be filled with the same traffic as 2019, but it's going to be more leisure travel than corporate travel. Because
right.
I think corporates have found a way where you don't really have to move from your seat and still get the work done. I think
Absolutely.
that's the future. And I think what you guys are doing is the future of people across the globe coming onto one platform, communicating, exchanging ideas, and helping inspire even one entrepreneur chase his dream is what all we are first looking at.
Excellent. Thank you for those kind words. I mean, I agree, but I moderate these sessions, but I love them. Thank you, Salesh, because I get an opportunity to speak to great minds like yourself. Thank you, Salesh, for that. Ashwin, what are your thoughts?
It has been really great, and thanks for doing this. And especially the last segment where the interaction between the panelists also happened. It was really useful, as you could see. I mean, Fabio gave, and everyone gave so many interesting ideas that definitely I'm going to now go back and sit and make a note and make a plan around this. That is going to happen for sure. So yeah, so it's been a very useful session for sure for me, and I'm sure for for everyone who is watching this as well. So yeah, thanks a lot for this. Amazing.
Excellent. Thank you. I'm really happy, super happy to hear that, Ashwin. Thank you. Thanks for sharing your insights as well. Marjay, what do you think?
Yes, I can only agree with I can only agree with the colleagues. And what I really liked is the international approach here, meaning to get the perspective from different countries, different continents, different investors, and to compare those with what's happening in our own market. And I like also the industry-specific focus, the exchange of ideas, technologies, startups, and the success stories that we've had here, and the great conversation. Also, thank you for very interesting moderation, Sam.
Excellent, excellent. Thank you, Majay, and thanks for sharing your insights, your perspectives as well from European market. And yeah, great. And we wish to have you again. Thank you, Majay. Last but not least, I want to hear from our economist who has been here. What's your closing remarks, Fabio? Because you've been on our shows regularly. I mean, what makes you to come back on our shows?
Oh, well, what makes me come back, and happily so, is the fact that in order to understand thoroughly the VC space, you need to dig a lot, because the spectrum of investment opportunity, investment phases, the kind of funds that are specialized in stages of financing and in sector is mind-boggling. So to be able not only to get the perspective of people which you don't meet normally at the local supermarket, and understanding what's their view, what's their niche, what's their perspective is invaluable, because there aren't too many places where you can acquire this knowledge with an international perspective. You might be knowledgeable about the VC space in, say, in Cambridge, London, Maryland, but to be able to gather this kind of specialized perspective from Europe, Singapore, India, in other events where I took part, UK, Dubai, and elsewhere. It's a fundamental aspect of the work. So for us, for me in particular, it's I'd be more than happy to continue this collaboration, because definitely I've learned a lot. I've got a lot of interesting insights, and I met exceptional people. So
Excellent.
thanks for playing this networking role, because I find it invaluable.
Great. I think, Fabio, other speakers also have the same views about attending the shows, because you bring a wealth of experience as being an economist as well. And also we do a little networking over here, our very intimate networking session where we just have a couple of people here. So the fact that you guys love the show, they love the format, and Ashwin is going to do his homework after he goes. I just want to tell you that your profiles, because our startup community is looking for help and to reach out to people like yourself who can mentor them, guide them, help with the investments. So your profiles are getting featured on our website at www.latoken.com/profiles. So you can see yourself featured there, and our startup community can always reach out to you. So that's what I'm telling you on the show. If you get approached by a startup community, please let me know. If you are actually attending a part of my show, then I can help you connect with them, and we take from there. And if you are also, like Fabio said, he has spoken at other sessions in the past. And this particular session was on IoT, was on Industry 4.0. We have sessions running Monday to Friday in Asia, where I host from Singapore, then my colleague hosted from USA. If there is anything of interest to you that you would like to share your insights on a particular different topic, please feel free to reach out to Carol that you spoke before we went live, and she's happy to bring you into those panels. So thank you. So my closing remarks as a moderator of the show is that, guys, please let's stay connected. Fabio is becoming a regular speaker, and I love to hear his insights. And he also loved to meet people from Asia, where he wouldn't have had access to. So please stay connected, and also please stay safe. We want to see you again back healthy, and have a good evening. And that's all from me for today. Till we meet next. Bye.
Thank you.
Bye.